Good evening, guys. It's Saturday, June 10th. My name is Dave Coker, and this is Talking About Finance. And oh my gosh, is it really that time again? It's a wonderful time. It's a joyous time. It's a time when we sit together, we talk together, and we talk about finance. And we do so in a fun way, looking at what me and my buddies, all finance professionals, talk about all week long. But we also consider deeper questions like how to get rich. Remember, we're not going to buy stocks and hope they go up. We're not going to sell stocks and hope they go down. We know that stock picking, that day trading, that swing trading simply does not work. And I'm not here to sell you anything. No system, no newsletter, no book, no signals, no service of any kind except for the truth. The simple way, the effective way, the time-honored way, the only way to be sure you're going to build wealth in the stock market. And that truth is, first and foremost, you gotta get paid. Why buy something if you don't get paid for owning it? That's complete rubbish. Sometimes it works, most of the time it doesn't. It simply does not work. And these false prophets, these stock gurus, these trading coaches, all know this. That's why they charge for their wisdom. And if you don't believe me, just ask one for a Monday morning tip. You won't get anything actionable. No clear advice on what to buy. Why not? Because all these experts who offer their services for a fee, fancy titles ranging from PhDs to professors, the list goes on and on. They're all frauds. Yes, I've said it clearly, I've said it distinctly. More hate mail, I don't care. If they want to change my mind, post actionable information when the market opens. Tell us in real time what to buy. Tell us in real time when to buy it. Tell us in real time what price to pay. And then tell us in real time when to sell it and at what price. No, the only way to get rich is slowly. Owning assets that pay us to own them. Invest for cash flow. Invest for dividends. And longtime listeners, I'm talking to you here, you already know this. So now it's time to talk about finance. The S&P 500 closed the week up about 39 basis points. 7 sectors outperformed the S&P 500, specifically consumer discretionary, utilities, energy, industrials, financials, real estate and materials. And 4 sectors underperformed: healthcare, communication services, consumer staples, and information technology. It was a pretty interesting week all in all. We're starting to see other sectors advance while tech, the big gainer from earlier weeks, is cooling down a little. It's all good stuff. The VIX traded down to 13.83, opened the week at 14.60. It traded down to 13.65 on Thursday, and soon we're going to hit the summer doldrums. Remember, guys, a lot of the liquidity makers, the market makers, they tend to take the summer off. They go to summer houses. Some feel a slowing U.S. economy and higher interest rates are a perfect setup for an October. Remember, a violent October. Oh boy, we'll see. I'm building liquidity. And if I get that buzz, if I get that feeling, I'll definitely move in very hard on the short side. But we'll talk about it later. The 10-year note closed the week at 3.74%, up about 4 basis points week on week. It's down about 10 basis points year to date. Oil closed the week at $70.29, down about 2% on the week and down about 12.4% year to date. And since yesterday was Friday, guess what I did? Yes. I bought Bitcoin and I bought Ripple. I am so damn predictable. But we're not here to talk about me. Let's find out what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week. It's all good stuff. And just in case we haven't been introduced, we are Global Wall Street. And between our Telegram channel and our personal networks and LinkedIn and WhatsApp and Pub meetings. We know everyone. We know what's going on in lots of different financial centers globally. This week, of course, we're on Wall Street. We're also reporting from the city of London, in Chicago, and Paris, and in Shanghai. We are everywhere that matters. Keep in mind, guys, in finance, like in lots of businesses, relationships matter. Long-term relationships are stable and solid and never die. So let's go. 7 slides for 7 days. This is so excellent. Oh yeah, and this is a good one. We're starting to see now influencers, have been around for a long time, and it's a crowded market. So we're starting to see influencers trying to move out into different areas. I have no idea who this woman is. I have no idea about her age. I am very dubious she has anything worth paying attention to. She's a personal finance influencer, my God. If I was picturesque, I would probably try to get the same type of gig, but I'm not. It's really amazing that they're doing that. I wonder what kind of wisdoms she's going to be offering up. Probably buy low, sell high, keep a lot of cash around. The usual garbage that people without an original idea tend to think, or tend to say. Now, we know that there's really only one way to make money. Investing in stocks, it's a sucker's game. Trying to buy low, sell high. Trying to sell high, buy back low to cover your short. Invest in stocks that give dividends? Yeah, this gentleman loves it. So do we, don't we? It's the only way to be sure. And I've told you guys that I own land in the Metaverse. I own land in Decentraland, actually. And I got a really strange feeling about a month ago. There were a lot of odd people poking around asking questions. And I never said anything. And I don't mean odd because of the way they look. I just mean because of what they were asking about. And just very, very strange vibe. Instead of there to enjoy the space and enjoy talking to each other, they were very, very focused on the bottom line, which, is sort of cool. But it's not really what we do in the Metaverse. And yeah, they're moving in and they are buying land. I was pretty surprised to see a lot of land being bought up in Decentraland. I don't pay attention to the other spaces so much. I'm not totally sure about that area. But without a doubt, there's a mini land rush in Decentraland. Myself, as you know, I've owned down there for about 5 years now. I've owned property in that virtual environment, that Metaverse, if you want to call it. And I never really worried about the price. I mean, first of all, I had a tenant, a long-term tenant. And, she was paying, so it's no big deal. If they tell me the property's worth about 1/3 of what I paid for it, I don't really care. I don't run my property business, physical property business, or my property business in the Metaverse. I don't really run it that way. It was just very interesting. So pay attention to that. That's a very interesting phenomena. And I have no doubt, because I know how these people think and how they operate, they bought at a certain price and they're going to do whatever they can to drive that price up. I might just buy more, to be honest with you. I'm starting to think about it. And this was an interesting one. We talked about this, and there were mixed feelings. People that on the channel that were really into finance and really into trading and stuff kind of thought it had too much of a casino element. And yeah, I'd agree with that. But is it a casino for the educated? Well, it is if you try to trade. If you buy like we do, if you buy just for cash flow, just for dividends, only for the yield that stocks will pay you, or a property for that matter, if you buy for that reason, no, it's not a casino at all, because you're going to buy and hold forever. Oh, and I was asked in a direct message about other asset classes. Yes, I do own a great deal of art. And I've even got a Warhol. I've been buying art for about 40 years now. And no, I didn't buy the Warhol. Andy gave it to me. Long story, not appropriate for this channel. Hit me up in a pub some night, buy me a drink, and I'll tell you all about it. But yeah, I do like art. It doesn't pay me a dividend, but I'm not selling. And I still buy art. I buy contemporary art. We're up in Camden Town periodically over in different parts of London where we can see Spitalfields is very good. And there's other parts of London where we can see art. And I can do deals and I can have a really good time. I ran 2 art galleries in New York back in the early 80s. So I sort of know how to wheel and deal with these people. But yeah, in general, stock market's not really a casino. You just got to stick the odds or stoke the odds in your favor. And then you'll be okay. And poor Mr. Biden. Hello, Joe. Yeah, this has been thrown up a lot, and a lot of people in the group are very dubious about the economy in general. And anytime he keeps talking about the economy and how well it's performing, they're full of these points that they keep bringing up. So, yeah, he does come off as a little clueless sometimes. God bless him. We'll have to see if he runs again. It'll be interesting. And trading crypto. My God, why would you do it? Trading in general is stressful. Anyone that tells you the opposite is full of it. They're talking rubbish. They don't know what they're talking about. And yes, I know what stops are. And if you go, oh, I just put a stop in and that takes care of it. Oh, no, 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 no. People have been bankrupted when the market moves quick and it hit the stop, but it plunged rapidly below the stop. And by the time the stop was executed, they didn't get the price they thought they would. A lot of people are confused about stops. It's not a guarantee to get that money. It's simply a signal to some broker's system to sell when the asset hits that price. If it's dropping like a rock really fast, you might have some problems. And look no further than when the Swiss franc de-linked from the euro. A lot of people in the UK, many people in the UK, I should say, were bankrupted. And yeah, they had stops too. It didn't work, did it? So no, you really don't want to be trading crypto. Just do what I do. Buy Bitcoin regularly, whether it's once a week like I do, once a month, once a quarter, couple times a year, even once a year if you're rigged that way. If that's your action, it doesn't matter. Just buy and hold. I don't care what the price is. I honestly don't care. I just buy every Friday morning. I'm up at 0400. Typically by 4:15 or so, I've pushed the money over to my broker. It shows up instantly, very quickly. I do the deal, push it off to my wallet, because you never leave coins on the exchange, right? Push the coins off to my Bitcoin wallet, and I'm done for the day. That's it. And this is an interesting one. This came up. Guys, you don't need to know how Bitcoin works to benefit. You don't. All you have to do is buy. Don't worry about it. Do you know how the dollar works? I doubt it. Who knows how the stock market works? I know how it works at a very low level, but I spent most of my career before I entered academia on trading floors, and I still talk to people constantly who are on LSE or on NYSE. No, you don't have to know how the stock market works to own stocks, to buy stocks. You don't have to know how Bitcoin works to own Bitcoin, to buy Bitcoin. You don't. So if you want it, just dive right in and do what I do. Dollar cost average, deploy the same amount of money regularly, whether it's every week, as we mentioned, every month, every quarter, every 6 months, every year. Spend the same amount of money every time and don't even worry about it. And if you look at the history of Bitcoin, in 5 years, the Bitcoin you buy today will be worth more. Take a look at the long-term history, guys. That's it for me. It's been wonderful chatting with you this evening. Have a great night. It's sort of warm here in London town. 28, headed out to the coast. Going to relax. That's it for us. Take care, guys.